Hello dear traders, I'm Maria Staradop and this is the review of crypto analytics from fx.co. It's the 7th of February today, Tuesday, and in our today's review, why did the strong labor market in the US provoke Bitcoin correction? What events should be in the limelight among traders, Bitcoin traders this week, and what do institutional traders think about cryptocurrencies? Let's start. We will start with an article by Artem Petrenko and a technical picture of Bitcoin. So, Artem writes that the bullish trend of Bitcoin, which peaked in mid-January, is gradually ending. With each passing day, there is growing confidence that the 22.9-23.4 range will be the final zone within the current upward movement of the cryptocurrency. The difficulties of the upside movement of Bitcoin coincided with a similar situation on the stock market, and in addition, difficulties in overcoming the boundaries of this range provoked profit-taking, as a certain part of investors came to the conclusion that the potential of the bullish trend of Bitcoin has been fully realized. This greatly reduces the cryptocurrency's bullish potential in the short term. It is also important to note that the rise in price has intensified buying by long-term investors, which is a positive signal, but not for short-term targets. As a result, the number of addresses storing Bitcoin in the long term has reached a new record, while trader activity continues to decline. Another forgotten but important reason for the upward movement of Bitcoin is the correction of the US dollar index. The index peaked at 115 at the end of September and has been in correction since then. Meanwhile, Bitcoin has been rising. However, the asset managed to hold the support area of 100 and resume the upward movement. And as of yesterday, the US dollar index is moving upward on rising buying volumes, and this means that the stock and crypto market should expect a sideways or a local correction in the near future. The reason for strengthening of the US dollar was a combination of two factors. The first is gradual easing of the Fed's policy due to the growing deflationary movement, and the second factor is the strong labor market despite the constant increase in the rate. And the combination of these two factors suggests that at this stage the US can avoid a recession and still achieve the desired inflation results by the end of this year. It is this confidence that allows the US dollar to constantly strengthen. As for technical picture, let's have a look at the chart on Bitcoin, and on the one-day time frame, Bitcoin made another false breakout of 23,000 level and continues to decline. Let me note that the information is of yesterday. The article was written yesterday. The cryptocurrency made a bearish breakout of 22.8 support level and was trading about this level as of writing. Meanwhile, technical indicators of the asset indicate a further price decline, and the nearest target will be the area of 22.2, 22.4 thousand, where the lower border of the consolidation corridor passes, and subsequently Bitcoin may continue its downward movement to 22,000 and lower to 21,600. At the same time, it's important to note that the current corrective movement is of healing nature and will allow investors to enter the asset with another discount The accumulation process by long-term investors continues, and the viability of the bearish movement raises questions. So, as a result, Artyom says that Bitcoin may form the fifth consecutive red candle. However, we still do not see growing bearish volumes. This suggests that the lower the price falls, the more willing to buy Bitcoin. Given this, we can assume that the 21,600 level will be the final course of the current corrective movement of Bitcoin. Okay, let's have a look at the chart. Well, today is the 7th of February and Bitcoin opened today at 22,810 and now it is trading at 22,911. And as we can see, it's moving about 23,000 levels still. It declines slightly to 22,500, 600, then it rises again, then again declines. So far, it hasn't reached that very levels Artyom mentioned. 22.2, 22.4 and lower. No, it's still above it. Okay, and now let's move to another article and discuss what events should be in the limelight among investors this week, which events will be important for Bitcoin traders. The article by Ekaterina Kiseleva. So, this week, Ekaterina says, this week's news backdrop is expected to be relatively quiet. The most important event could be today and Tuesday when Powell delivers another speech. And investors will be listening, will be trying to catch some hints about further monetary policy, whether his statements will be hawkish or he will again repeat his dovish statements from the recent press conference. And the latter seems unlikely given the strong labor market data from the US. And presumably the new deciding factor will be the release of the US inflation data on February 14th next week. Whether Powell will be tempted to make comments today remains to be seen, or he will wait until next week. The second half of the week will focus on the latest US initial jobless claims data. In addition to the labor market report released Friday, this figure is considered the second most important for assessing the US labor market. If more citizens filed for unemployment benefits, Friday's report could be revised and sentiment in the cryptocurrency market could return to bullish thanks to a further drop in US dollar index. And finally, you could also pay attention to the University of Michigan's data on US consumer confidence on Friday. If it turns out to be positive, it could also support the risk appetite in the crypto market. And what's also worth mentioning, some statistics data about how institutional traders treat cryptocurrencies. What do they think about them? And the first survey conducted in January by JP Morgan Chase provides insight into predictions for the year ahead, and it surveyed 835 institutional traders in 60 global locations, and 72% of traders surveyed have no plans to trade crypto or digital coin, with 14% predicting they are not currently trading but plan to trade within 5 years. 8% are currently trading and 6% are not currently trading but plan to start it within 1 year. And two more surveys, first by asset management firm De Vere Group, which found that 82% of millionaires asked their financial advisors about adding cryptocurrencies, including Bitcoin, to their portfolios. A different survey by Nickel Digital Asset Management found that institutional investors expect a strong year ahead for Bitcoin, with 65% agreeing that Bitcoin could reach $100,000. And it should be also mentioned that last month, global investment bank Goldman Sachs ranked Bitcoin the best performing asset this year. Okay, and on this positive note, let me finish our review. And as usual, I wish you profitable trading and fantastic day, and we will see each other in our next review tomorrow. Goodbye, see you soon.